Thanks for joining us. You're watching a special Year in Review edition of Media Week. Well, the story, of course, we've been watching as the year ends is the future of the 10 network. With shares and ratings down, the third-placed free-to-air broadcaster has attracted takeover offers that it is now considering as we go to air. Well, for more on this ongoing story, let's return to our co-host, James Manning, editor and publisher of Media Week. What do you think? I mean, it's a hard one to tell at the moment, but where do you see this going?
We don't know much more. They've just had their AGM. There was really no more light thrown onto it. Still expected that front runners are Foxtel and Discovery. There's some interest from private equity and debt financing, but I don't think that's attractive, perhaps the board of 10. And the more I listen to the board, the more I think they're quite convinced of some sort of turnaround next year. You know, I don't know whether that's half an attempt to talk up the offer, but, you know, I think they've got a pretty good schedule bolted in for the start of next year. They get a couple of shows away, they get into MasterChef. The year's not looking too bad, so, you know, the worst case scenario, they've got a reasonable chance of getting some better revenues next year if they retain ownership.
Well, let's have a look at the top shows, the most watched programs for 2014.
Sure.
Looking at the free-to-air, the top 10 first for the year, and the sport always features prominently.
Yeah, look, we've fiddled this list a little bit, Bridie, too. So we've changed it so there's just one of each program in the top 10. Otherwise, you'd be flooded with, you know, a few different entries for My Kitchen Rules, a few different entries for State of Origin. So everything appears once to give you a feel for what worked. So yeah, look, sport dominates. My Kitchen Rules, it just keeps on going, that show. It'll be back again at the start of 2015. We expect it to do well again. Australian dramas, look, those miniseries In Excess, there's going to be a couple of them next year on Peter Allen, one coming on Peter Brock. I think they'll do good business too. House Rules did very well for 7. If you want real estate renovation reality shows, 2015 is all about you. There's going to be a lot of it, so get ready for that.
Let's have a look at the subscription TV. These are the top 5 sport programs first for 2014.
Yeah, again, I've fiddled with this list a little bit too, just only putting one of each code in the top 5. So there's all the best offerings from each code. That Hawthorn Port, I think that was the second semi-final from memory, or maybe a preliminary final, but of course Fox Footy doesn't have rights to the grand final, so that was their most watched show. Cricket from South Africa did very well for Fox Sports, and the rugby does well, NRL does well. And now that's the non-sport, that's the bottom end of the non-sport there, the top 6. Look at Lifestyle Channel, really dominates there. Walking Dead does well. Aussie Drama does well for Foxtel too. Wentworth, so, you know, does good business for them.
Yeah, and among those top, Selling Houses Australia?
Yeah, Selling Houses Australia was number 1. Game of Thrones is up there. The Real Housewives, Celebrity Come Dine With Me, and The Recruit. Bit of a surprise, The Recruit's not coming back in 2015. They're definitely working on a new one for 2016.
Okay, there you go. Well, of course, the outlook, so important, of course, for that ad revenue. IPG Media Brands quite bullish about ad spending in 2015 after what we saw a pretty flat result, really, for 2014. Well, to tell us more about the forecast and plenty more, we are joined by the Global Chief Operating Officer and Executive Chairman, Australia IPG Media Brands, Henry Tater. Henry, always great to see you. Thank you so much for coming on the program. Well, there's so much to ask you about, but firstly, I mean, you've taken on, we just saw the title there, a major global role at Media Brands this year. Just tell us what's that meant to your schedule and also your Australian customers.
Well, it's definitely given me a new appreciation for 24 hours in the day. It's 9 a.m. Somewhere in the world all the time, and so that's been it's been challenging, but it's hugely exciting. I think in a positive way, it's given us the ability to take what the globe has to offer in terms of insight, innovation, experience, and localise that and mobilise that a lot quicker than we've been able to do in previous years. And there are a number of our clients who have benefited from that. But it's been hugely exciting. Lots of work to do, and I feel, you know, really privileged to have been given the opportunity. So,
what about a little bit of speculation? I saw that maybe your international bosses are impressed with your performance and they might like to get a little bit more of your time. Could that happen in the future?
Well, I like to...
Is that outside of your hands?
Well, it is outside of my hands, obviously. I like to just take one day at a time. I'm really happy with how this year has transpired, both locally and also, from a global perspective. And, I'll just stick to what I'm doing, and, whatever the future holds, we'll deal with it if and when it comes.
I wanted to ask you, just before we get into, the outlook and looking through different sectors and performance in 2014, did want to ask you, though, there has been a lot of discussion about media agency accountability into the end of the year. Do you think the industry needs to review its practices, or, are there system checks in place to deal with questions that clients might have?
I think that's a really good question. The media industry and the media agency sector within that is pretty well scrutinised, and there's a lot of accountability built into that. There are many checks and balances that are conducted through the process all year round, and that is in many cases part of individual client and agency relationships, and built into contracts and terms and what have you. There has been some recent news which is a matter for that organisation. That organisation's made a statement in the market, and my view is that we should respect that organisation and allow it to conduct the necessary review and audit that it has communicated, and I think it's a matter for them. So I'm in no place to comment or make.
Yeah, but just in terms of general, everybody, you think there are courses you can take to make sure you're getting what you pay for.
Oh, well, definitely. Clients have and do have in many cases audit options built into their agreements with agencies. Many of our clients have audit options and provisions that they act on, and we support that, and they are designed to ensure that compliance to agreement is made. The way in which we work with media organisations is very similar. So there are a number of measures already in place which the industry doesn't talk a lot about because it's just commercial business, so
sure.
I think there are, to be quite honest.
Yeah.
But
let's jump on the outlook. Look, a few media companies have warned. Looked among them, Seven West Media. Tim Warner said, first half profit could be down a little bit. It's been a bit tougher ad market than we thought it had. This year looks like it'll be pretty much flat. Not a lot of growth. Yep. You guys are pretty bullish about 2015. Why do you think people will be spending more on advertising?
Well, our view on 2015 is a little bit under 4% growth at a broader market level.
It's quite a change, isn't it, from this year?
It's quite a change. We're expecting that the year will finish at about 1%, flat to 1%, yep. Which highlights not only a tough and challenging market, but also some difficult comparative numbers off of last year. There are a number of factors that we see driving that. First, digital, in our view, is still growing at a well above market levels, and we see that continuing. The rate of decline in print and magazines is coming off, in our view, so that automatically increases growth. Together with what we see and what we hope in some confidence around a lower Aussie dollar, which should make multinationals trading here more confident, as well as the news of some potential rate cuts, which could put more cash into consumers' hands and hopefully a bit of confidence back in the market. So they're some of the key factors that we sort of brought. They're the macro factors. Mm-hmm. On an individual channel and division layer, there are ups and downs, but 3.8 is our view. I appreciate you guys may see that as bullish. We hope that we are conservative.
Most people would want that to be a good outcome.
I guess you just mentioned there, obviously, the rate of decline in newspapers, magazines, and I just want to ask you, because some have been questioning the true worth of digital ad spending. Is that move gaining any momentum, do you think? Have some advertisers or agencies rushed too deep into digital advertising?
I don't believe that's the case. Mm-hmm. On a market level, we're sitting just under 37% of total spend in digital channels. Search is a. Is
that you or everyone?
That's market. That's
right, okay.
Australian market.
You're pretty much on that.
We're on par, maybe a little bit above that, based on our client profile and mix. Globally, the world is sitting at around 30%, so Australia is ahead of the pace. The reason for that growth is because of the accountability that sits within the digital ecosystem and the ability to measure in a more meaningful way. I would much rather be sitting as a market in Australia ahead of global trends, then behind global trends in terms of digital, purely because digital is such a fast-paced and innovative part of our space now that being ahead is probably the best way we can stay at least in touch with the speed of technology and innovation. So, there are markets around the world that are behind for other reasons, like broadband and penetration. We have a pretty good broadband penetration, and with better to come. So I think we're right on the money. We're seeing that probably hit on a global level 40% by 2020. I wouldn't be surprised if Australia's a little bit ahead of that, and that creates a lot of opportunity for the non-digital terrestrial media organisations who maybe umming and ahhing on whether to invest or re-engineer or re-evolve their businesses. Our view is that it's a sound and safe bet.
It's interesting working overseas. You said before you're getting an interesting perspective, spending more time out of the country. You've talked a little bit about print and newspapers, that decline slowing a bit. Outdoor still looks pretty bullish here. What's that like elsewhere too?
Outdoor's pretty vibrant all over the world. A number of markets have really accelerated digital outdoor and are seeing the benefits of that investment. Programmatic is a huge phenomenon taking place all over the world. It is a global channel. Digital is a global channel, and programmatic and automated activity is global in nature. Outdoor companies who are investing in digital plant are getting the benefits of tapping into programmatic investment pools, which are growing. So, I see the Australian market starting to pick that up, and I would expect that some of the outdoor operators here will ramp up that investment and work with local councils and the regulators to enable that.
Just want to ask you about TV as well, because something, James, that you've been sort of mentioning the past few months is sort of the decline in the total numbers of people in viewing audiences for TV, and now we're hearing about streaming video on demand as well. What's your view on that? Is that something that you're picking up on? Is that sticking?
Yeah, if those people go to something like Stan, they go out of that advertising environment, they're watching ad-free content. Is that...
Well, they're doing that now.
Yeah.
And, they're doing that by... turning to their tablet, PC, mobile device, in particular mobile device. So that is a shift and a trend that we have been monitoring and trying to keep up with. And that points largely to why we as an organisation and as a market have such a high profile of digital spend. I think we've been very quick to address that, and that shift is, in my view, a big part of the free-to-air TV growth numbers this year. A lot of dollars have actually shifted out of free-to-air and into online video and mobile, and I expect that will continue. Streaming services, are not an they're not ad funded or they don't have advertising on them. So we will keep an eye on penetration levels. I took note of the 10% penetration targets, which are pretty aggressive in my view. And if streaming penetration got to 10%, then that means all sorts of really interesting dynamics for free-to-air and for the media sector as a whole. I think it'll take some time for penetration to get to those sort of levels.
Overall, though, I mean, the amount people are viewing and certainly the numbers of viewers is up, but it's just where they're going perhaps is really shifting and fragmenting.
That's correct, and that's why the shift of dollars into online video and other TV products that are non-terrestrial has seen such growth.
So you just follow the audience wherever they go.
Well,
if they started to come out of digital, all the money would follow them wherever they go.
That's correct, yes.
Yeah. Yeah.
Henry, we've run out of time, unfortunately. It's always so great to get your thoughts and everything. Thank you so much for joining us.
Thank you. Good to see you guys.
Good to see Henry Tager there from IPG Media Brands. We're going to take a very quick break here on Media Week. Coming up, the most tweeted events, the most popular hashtags, the Aussies with the most followers. We'll get all the details. Twitter Australia Managing Director Karen Stocks joins us next.